Well, a new report from VantageScore shows a troubling trend in the auto loan market. Delinquencies are climbing more than 50% since 2010, and it's not just from risky borrowers. For more, we're bringing in Rikard Bandebo, Chief Economist at VantageScore. Rikard, it is good to see you. Let's start out with auto loans, because you were breaking down that data, and it was interesting, Rikard. What you say now, correct me if I have this wrong, but you call it the riskiest credit product now. What is going on there? What are the trends? Walk us through it.
So what we saw was that Q1 of this year, actually auto loans became the riskiest consumer credit product. And that has been something that has been evolving over some time. So what we did is we actually, because this is a question we get asked by lenders and economists all the time, what's going on with these auto loans and the delinquencies. So we went back and looked at the data going all the way back to the end of the last recession. And what we see is that actually, going back to the first quarter of 2010, at that point, auto loans were actually the least riskiable consumer loan product. And now, this year, we now hit the point where it's the most risky one. And during that time period, what we saw was that every other loan category actually has seen their delinquency rates go down from the first quarter of 2010, whilst at the same time, auto loans have gone up over 50%.
Is that, now what are the reasons for that? Is that affordability? Is that people are they biting off more than they can chew? What are the variables?
Yeah, so we did a big study. We pulled in our data, we pulled in data from the government data and did a big regression analysis. And what we found was that there are really two themes that are driving this. First one is very much, as you insinuated, is affordability, right? So as we look at, for instance, average loan sizes, we've actually seen that in this period of 15 years, the average auto loan has gone up faster than any other product, including mortgage, right? It's gone up 57%. So on top of that, in terms of affordability, more recently, we've seen interest rates go up. So that's kind of a double whammy on your monthly outlay, right, for your auto loan. Not only has the principal gone up, but the interest payment has significantly gone up as well. And given that auto loans are typically one of the second or third biggest outlay in an average household on a monthly basis, that's a pretty big hit for many consumers.
When we talk about, what are the consumers that are, Rikard, most vulnerable when we talk about auto delinquencies?
So, like always, you tend to see that obviously subprime consumers have higher delinquency rates than others. But what the interesting trend that we're seeing here is that a couple of years ago, as these auto loans started to rise more quickly, a lot of auto lenders adjusted their lending criteria. But that didn't stop the delinquencies increasing. What we saw was that, yes, we saw that subprime auto loans actually reduced in risk. We saw less delinquencies from subprime based on their changes. But at the same time, we saw the amount of delinquencies coming from near-prime and prime consumers going up quite a bit. So it's not necessarily then the answer that most people expect, that it's subprime. It seems to be that there are challenges with those people that are actually from higher income households and have had traditionally better credit health.
So we talk about the consumers. What are the kinds of lenders, Rikard, that would be most vulnerable here?
So, I think that obviously we're seeing an improvement in the delinquency rates for the subprime auto lenders, but again, that's always a big risk there. But again, the issue we're seeing now is the increase is hitting higher, or the rate of increase is higher for those near prime and prime auto loans, and so that's probably ones that are a little bit more concerning at this moment.
Do you watch auto delinquencies, Rikard, as an economist, as any kind of, is it like a canary in the coal mine, so to speak?
It's definitely telling, because it's such a big outlay. And also, unlike other credit products, a lot of people are very reliant on their car, right? And if they don't make the payment, somebody's going to turn up one day and they're going to take that car away. So they really want to make sure if they need that car to get to work, that they make that payment. So it's obviously pretty high on what they call the hierarchy of repayments. And so what it's telling us is, not surprisingly, that there's a growing number of consumers in the US who are struggling to make ends meet. And in that light, as we look at the data, as we're looking at the consumer right now, we're actually seeing that they're probably the most precarious in terms of credit health that we've seen since the end of the last recession.
And what explains that exactly, in your opinion?
So, it's a combination of, the situation with employment and incomes. We've seen a lot of people with costs having grown disproportionately since COVID, but their incomes haven't necessarily kept up, right? So they're struggled then between outlays that have increased a lot, whereas the incomes haven't. And so how are they being able to make ends meet? Well, they can reduce savings, but those who didn't even have enough ability to reduce their savings are then having to face the question of which bill am I going to pay, this bill or that bill?
Now that struggle you're highlighting there, that you're seeing in the data, Rikard, do you see that persisting?
So on the bright side, we're actually seeing that on some unsecured products like credit card and personal loans, we may have hit a peak already. So we're starting to see there some of the year-over-year delinquency rates are beginning to come down. However, on secured loans, such as auto and mortgages, those are continuing to increase. However, the rate of increase is slowing down. So the big question is, are we going to see sort of a peak of these delinquencies, and are we going to start seeing them ebb and maybe come back into a better place? That's the unknown, but the optimists of us out there are hoping that will be the case in 2026.
Let's stick with the optimistic take. Rikard, great to see you on set. Thank you, sir.
Thank you.